do emerging markets like the fact the US dollar is going down if they've got US dollar debt? So it's gone from being sort of a buy down at that midpoint to now really being at risk.
I wrote about one in Fat Tail Daily today. It was called Select Harvest. Now, I wrote that before the market opened, and in fact, because it produces almonds, California, of all places, produces the most almonds in the world, I think. And anyway, of course, they've been tariffed now out of the China market. Welcome to this week's Closing Bell episode. You'll notice a little bit different. Murray and I are broadcasting outside the usual Fat Tail studio this week. Murray's about to venture off into the great unknown of his Easter holidays, which he's very excited about.
Giddy up.
But first of all, we've got to cover off on all the things that have been going on in the market. So we're going to talk about US stocks and Murray's call on the way they're looking, which will obviously feed into what's going on with the ASX. The US dollar, one of the, if not the most important asset right now going around in the world, and what it's signaling about, and of course the US bond market, where the rumbles there caused Trump to step back from his tariff policy. So very important markets to watch. Murray, how you going, buddy?
I'm all right. I'm very excited. Week off up to Hawk's Nest on the bit north of Port Stephens with all my uni mates. So it's going to be a pretty awesome week, I think.
Beauty. All right. Well, you did allude to just off camera there that you're a bit worried about how the US stock market is looking. Can you walk us through why that is?
Yeah, because, we've seen this massive volatility and we've seen the bounce. So the big question on everyone's lips is, was that it? And now is it time to buy? Or should we be offloading risk while the market's rallying because there's signs around that we could be, ready for another leg down? And the way that my sort of whole model, I guess, looking at those wave structures, looking at the midpoints, which is a point of control as very important fulcrum for the market, but also the buy and sell zones, which is those sort of, let's say it's a 75% retracement, 87%. I'll show you in a second the buy and sell zones and explain it. But there are areas within the range where it's often at risk of actually reversing and going back to the midpoint. So that's the first key thing for people to understand. I'll show you. And it's very clear. I've done it a million times for people showing. And the markets, they've moved so quickly. The volatility was so huge that the bounce off the midpoint of the last 2 years rally has already got to the sell zone. That's in like a matter of days. So it's gone from being sort of a buy down at that midpoint to now really being at risk of a spot where you'd say, if we are going down, this is the area where the big sellers are going to come in. So that's why I'm really warning that look, there possibly is going to be more downside, and really risk reward, like buying it here, hoping that that's it and it's going to keep going up when we still know there's so many uncertainties around, versus maybe offloading a bit of risk on a huge rally after a massive, scary sort of crash-like event. Most professional traders would be leaning towards, I'd rather de-risk, because even if I'm wrong on that, I'm probably still long. But if I'm right, I'm going to be pretty happy when the market's crashing in a month's time. But loading up on risk here, boy, you can look pretty dumb pretty quickly if markets turn back down again.
Well, just looking at the price action in the last few days on the Aussie market, it's very subdued. Except for the gold sector, there's not much going on. So I don't feel like you're trading away a lot of upside at the moment, in the short term at least anyway.
Yeah.
When we're talking about weakness and that type of thing, you alluded also before to the US dollar. What's going on there?
Yeah,
So
look, it's
walk us
about to
through.
crack a massive level, 100 in the DXY. Look, we'll jump to the charts, but just to set everyone up for the scene, the US dollar going up against a 10-year support level, which used to be resistance, and under there's very little support. So I could actually see this US dollar cascading to the downside very rapidly. And you're seeing the gold price flying higher. The yuan, the Chinese yuan's holding steady, which is a bit weird when you've got all this massive trade war that's actually just really kicking off against China v US. So really the US dollar should be going up against the yuan. So we're seeing probably that China's selling US bonds and supporting the yuan. So you're seeing US interest rates go up, which probably China's happy about, to put pressure on Trump. to say, oh, well, stuff you guys, we'll sell your bonds and make your interest rates go up, even though we know you actually want the interest rates to go down. So they're killing a few birds with one stone by selling out of bonds, possibly buying gold, which is making gold go vertical, and supporting the yuan.
Well, I was just going to say too that if we did get a really big sell-off in the US dollar, surely that would be very destabilizing for everybody.
Yeah, well, it certainly would change the whole picture from the last few years, wouldn't it? But thinking through commodities, probably would be supported as the US dollar sells off. The US dollar price goes up, but oil's certainly still looking really weak. Do emerging markets like the fact the US dollar is going down if they've got US dollar debt? Does that help them a bit? So that sort of releases a bit of pressure from emerging markets. There's a lot of factors to think about, but for me, it looks like the US dollar is about to get pretty smoked, even further than when I said it was a sell up at 106.
All right, we'll take us to the charts that you alluded to.
You're right. Let's have a quick look, and I want to go through these quickly, so we're not taking up people's time. So here we have that rally that we've been talking about in the S&P 500 from late 2022 up to 2025. Really clear wave to the upside in the bull market. This is why it just makes it very easy for me to sort of make these calculations of what's going on. There's your midpoint, the point of control. And what adds weight to what I'm saying is the fact that the low of the correction last week was bang on the midpoint. So the buying was there, which really lends weight to the fact that this wave structure is what things are being really created off, the calculations. So based on that, the sell zone, which would be, again, and the creating these zones really is just splitting, I'm splitting this range in half, is that line. And then if I split that range in half, we've got that there. So there's your sell zone area of the wave. That's where there's just heightened risk that if we are going down, it can see lots. That's where the big picture selling pressure often comes in, and you'll see a retest of that midpoint. And the theory being, if it breaks below that midpoint, there's often not a lot of support until the buy zone area. So that's the sort of key factors to think about in this. So the jump we've seen just in the last week took it from the midpoint to the bottom of the sell zone exactly. And it's also in weekly downtrend, strong weekly downtrend. So there's a 10-week below the 20-week. So often you see, mean reversion going to retest the longer-term moving averages, as you see when we rally. Go and retest those longer-term moving averages. If it finds support, sort of broke through for a second, but finds support at the moving averages and will keep going up. And it's the same when the market's going down. So you'll often see impulsive moves to the downside, move back to the moving averages. If the selling pressure is there, that can be the beginning of the next leg down. So just from the US point of view, it's at risk, and we're seeing the selling pressure coming in the overnight market.
And I just noticed Nvidia's down again because Trump's put restrictions on what they can send to China by the.
Right.
If I got the headline right, anyway, that's a very key stock for this bull market. That
Yeah,
previously,
and so many of them, even Google, Amazon, they all look sort of a bit toppy to me. So after you've had a big volatility scare like this, a lot of professional traders will be almost forced to deleverage. And just a lot of people who've been around markets for a long time will know that these short squeezes can be short-lived, and offloading into the strength is what you need to do, because you'll wake up one day and it'll be down 5%, especially for Australian traders. Overnight market will have a big move and you'll think, oh, gee, it's recovering. And then all of a sudden it's off 5% and you're screaming, why didn't I sell yesterday? So while it's in this phase, I'm just thinking high risk area from 5,500 to 5,800 in the S&P 500. And look, it may still head higher. It may spend a few weeks going up. Often the short squeezes can go further than you think. They almost go far enough to get everyone bullish again, is often the case. So, from here, I wouldn't be, I'm happy to say, look, it could sell off and rally again and get all the way up to that 5,800 level before actually finding the selling pressure and tipping over. So, big picture, I don't need it to sell off straight away, but it is just in a risky moment now where the momentum is so hard down, and we've had a first retest of the resistance level. So it's like it can actually turn back down again. So and
Absolutely.
moving on to the next one, just quickly, that US dollar. So very quickly onto the US dollar, and again, this is looking at the same theory, all the same sort of ideas, and looking at that US dollar since the rally in 2021, and I can pick out that very sharp rally that occurred. And you can see over the past few years that the key level is actually 100, which is a bit lower than that midpoint. So that sort of support level's been between the 100 level and 102, which is the midpoint here. So
Mm-hmm.
you've seen, massive run in the US dollar. That then had a mean reversion event back to the point of control, or to this area. And it's just spent the last few years, oscillating, doing nothing. We had the rally up into the sell zone area here. And that's when I actually came out with a sell on the US dollar when it was at around 107. And so then that's crashed back through to support and is now actually testing that support at 100. So what support is below here? There's going to be a lot of stop losses below this area from all of the trading that's been happening for the last few years. So under here, I'd expect it to be pretty quick. And we've got the buy zone area is 93 to 96. So look, it could be there in 2 weeks, 3 weeks. That's sort of how it's set up at the moment, is that the break below this area at 100 could see a cascading effect to the downside in the US dollar. And also on the bonds, the 10 years, I'm thinking they're possibly a good buy, but there's a lot of extra risk with this because, is China supporting the yuan by selling bonds? I mean, that may turn up again and all of a sudden they get smashed. So, you've got to be a bit wary on this one. But just for me, looking at this is the US 10-year yield, and this is the last wave to the upside in that US 10-year, going up to 5% yield all the way up here. And since then, it's just been oscillating between the buy and sell zones. And once it does that, it's sort of down to the buy zone, midpoint, back to the point of control. So it's really oscillating in this range. And at some point, it's going to blast off. So here we had this weird week last week where the bonds sold off from 3.9% all the way to 4.6%, which is the bottom of the sell zone there of the yield. So it's in weekly downtrend. So for me, I reckon the bonds are probably a buy, unless some weird thing happens with China and they really do need to. That they have it. They're determined to absolutely smash US bonds, and we see something crazy happen. I'd say the odds are that we're going to see those US bonds rally from here. But yeah, I'd be probably running away if they went above 4.8%, and especially above 5%. All bets are off, and maybe there's a real serious issue with the US bonds and what's going on as far as trade developments between US and China. Maybe US isn't selling as much, so they don't need to buy as many US bonds, do they? So we can have all of these sort of
Absolutely.
weird things going on. But that's sort of the setup at the moment. Is that stocks beware? They can actually sell off pretty sharply again, and that US dollar is probably going to get smashed. But the US bonds is a bit more iffy because of the geopolitical risk with China.
We should just say that you did put out a trade today for your subscribers of your service, right? So it's not as if,
Yeah,
whilst the general market has a bearish outlook, there is, and again, we talked about this before with the gold stocks, they are going up. So there is certain stocks that are defying this bearishness, right?
there always is. Always is. It's just finding them is difficult. Some of the stock we bought today was actual something to do with this US-China problem and the things that have been going on. So they're benefiting from the problems, basically. So it all depends, doesn't it? But just in a general sense, I wouldn't be going out there and just buying stocks willy-nilly thinking that they're about to take off.
And you do have to be careful with that idea of the stocks that benefit, in the sense that I wrote about one in Fat Tail Daily today. It was called Select Harvest. Now, I wrote that before the market opened, and in fact, because it produces almonds, California, of all places, produces the most almonds in the world, I think. And anyway, of course, they've been tariffed now out of the China market. And so the Select Harvest has clearly been running up on this.
So you said they were a buy today and they got smashed. Is that right?
Absolutely not. And in fact, I said I wouldn't buy it, but mainly because it's an agricultural stock, and it just brings in all these complications you can't control. If like some pest comes and wipes out the crop, kind of thing.
Yeah, there's so many things going on at the moment. I think it's not a market for amateurs to be playing around in too much, I don't think. Because when the volatility goes up like this, it can do things that are way outside of what you expect. And we still really don't know how things are going to settle between US and China, how it's going to affect growth, what other tariffs are coming. So it's certainly a high risk environment to be playing around in stocks aggressively, I think.
Yeah, but I was just going to finish the Select Harvest thing, is that they released their update and it tanked 12%. And so even though almond prices have gone up because of the trade tariffs now, that there are other issues that hit that company against what the market had priced in. So you can still get hit even if it's a supposed beneficiary type of thing. So just an interesting observation.
Something can always go wrong, Callum. We know that in stock trading. The market always makes a fool of you at some point.
Absolutely. Yeah. Or even, I had 2 weeks ago, copper was flying and my copper stock was going through the roof, and you were going, how good is this? And then suddenly, bang, it's like a steam train came through.
What a move. From $5.20 down to $4 or something in a week or two. It was just completely insane. Yeah, it's been pretty wild ride watching it all happen. And yes, it's not easy trading conditions, but that's why I'm just sending out that warning that, look, don't get too bullish at this juncture. There can still be some more volatility ahead.
Alrighty, well, let's leave it there for today. It's just a short up because obviously we've been through a lot over the last couple of weeks, and now we've just got to sort of see how things play out in regards to your Big Wednesday thesis, which is still in place. So there's lots to discuss. We'll have a break for Easter, come back, see how the US shapes up over the next few days, and we'll be back next week. So remember to give us a like if you enjoyed the content, a thumbs up or whatever. Thanks, Buzz. I'll see you next week. Enjoy your break, and we'll catch you again soon.
Check you later.